Good evening. In this video, we will be talking about notes receivable discounting. So previously we've discussed how we can finance or how we can get financing with our accounts receivable. So now let's take into account our notes receivable. So the concept of discounting is unique to notes receivable. So we discussed in previous lessons that promissory notes are negotiable instruments. This means that they can be transferred through a process known as endorsement. Okay, so the original parties to a promissory note are the maker and the payee. So the maker is the one who issues the note. So they're the ones that are bound to make payments to the payee. So the payee receives this payment. So notes have a maturity date where payments are made at stipulated future dates. Sometimes, for various reasons, the payee may want to collect early on a notes receivable. So one way they can do this is by endorsing the note to a bank or other financial institution. The bank, in this case, becomes the endorsee and will have the right to receive payments on the dates stipulated on the note. In exchange, the bank will pay the maturity value of the note to the payee minus a discount fee. So this is called discounting. Discount fees are computed based on the total value at maturity of a note and stated as an annual rate. Okay, so basically discount fees are the product of the value at maturity, the discount rate, and the discount period. The discount period is the remaining period to maturity. So if you're discounting on this day and it matures in 90 days, in let's say the remaining maturity is in 60 days, so your discount period is 60 days. So let's also discuss what types of discounting are out there. So discounting can be done without recourse or it can be with recourse. Without recourse, if the payee does not have to pay the endorsee when the maker dishonors the note. So this is accounted for as an absolute sale. Any difference between the carrying amount of the note in the books and the net proceeds from discounting is recognized as a loss. If the discounting is done with recourse, then the payee has an obligation to pay the endorsee if the maker dishonors the note. In the absence of any evidence to the contrary, it is assumed that discounting is done with recourse. So you can account for discounting with recourse as a conditional sale or a secured borrowing. So when it's accounted for as a conditional sale, there is a contingent liability. So a notes receivable is discounted account is credited, and it's closed against notes receivable only upon payment by the maker upon maturity. If accounted for as a secured borrowing, uh, there is a liability recognized upon discounting, and the discount fee is treated as interest payment. So it's an interest expense. There is no gain or loss on discounting recognized. Let's do a problem discounting without recourse, problem 9-1. So it's Walleye Company. Walleye provided the following transactions. The entity sold merchandise for 500,000, accepting a note of 500,000 for 6 months with interest to be paid at maturity at 12%. On March 1, the entity discounted the note without recourse at the local bank at 15%. So 15% is an annual discounting rate. On July 1, the customer paid the bank in full. So 6 months from January 1. So July 1 is the maturity date. So the customer paid the bank in full, meaning the customer honored the note. So on January 1, it's easy, just record sales and notes receivable for 500,000. On March 1, you record cash of 503,500, a loss on discounting of 6,500, notes receivable of 500,000, and interest income of 10,000. So the notes receivable is essentially derecognized, and an income of 10,000 is recognized. This is for the 2 months from January 1 that you have already earned, but you have not yet collected. So, and on July 1, when the customer paid the bank in full, there is no entry. So how was the discount fee and cash proceeds calculated? So you get the value at maturity first. So face amount of the note is 500,000. So if you're keeping it for 6 months, so that's 30,000 of total interest, computed as 500,000 times 12% times 6 over 12. So value at maturity, if you kept the note, is 530,000. Since you discounted the note, so it will be less than 530,000. So how much is the discount fee? So you have a maturity value of 530,000. The discount rate is 15% annually, and the period is 4 months to maturity. So since you're discounting it at the second month of the term, so your discount period is 6 minus 2 months, so 4 months remaining. So the total discount fee will be 26,500. So you have proceeds of 530,000 minus 26,500 discount fee of, so that is a net cash proceeds of 503,500. Let's do another example. Now let's do discounting with recourse as a conditional sale. So problem 9-2. Morale Company provided the following transactions. March 14, sold merchandise 2,050,000 to a customer. FOB destination terms, payment terms of 2, 10, and 30. So you get a discount of 2% if you pay within 10 days, and you have 30 days to pay. On April 7, receipt of a 60-day 12% note dated April 5 from the customer. So the customer can't pay within 30 days, so that's why they issued a note on April 5. The face of the note was the amount of the invoice minus freight charge of 50,000. Again, this is FOB destination, so freight is, so the person who's obligated to pay freight is the seller. So in this case, it's Morale Company. However, the customer paid for it, so they deducted it to the face amount of the sales or of the invoice. The note of the customer was discounted with the bank at 15%. Okay, so in this case, you need the cash, and then the customer cannot pay, so they say they can pay in 60 days from now. So with this, you discount it with the bank. So on June 4, you received a notification from the bank that the customer dishonored the note. So the entity paid the bank the amount due, including the protest fee and other charges of 10,000. On July 4, that is 30 days from the actual due date of June 4, you received cash from the customer for the full amount of indebtedness plus interest on the original face value. So for the purposes of this problem, we're using a 360-day year. Okay, so March 14, you have accounts receivable of 2,050,000. On April 7, you receive the note and you record freight of 50,000. So you classify accounts receivable to notes receivable. On April 20, you will receive cash from the bank uh, when you discounted the note. So you have a notes receivable discounted account of 2 million. You recognize 10,000 interest. 10,000 is computed from the 2 million note, the face of the note, or and 15 days from April 5 to April 20, 15 days of interest income. So that's 15 over 360 times 12% times 2 million. So that's 10,000. So total loss on discounting is 8,250. On June 4, you got notified that the customer dishonored the note. So now you have to reclassify, or you have to pay uh, the bank $2,050,000. On July 4, you received cash plus interest from the uh, customer. So you have cash of 2,070,000, debit accounts receivable. No, credit accounts receivable 2,050,000, and interest income of 20,000. So discount fee was calculated using the formula. So you have 60-day interest of 40,000 computed as 2 million times 12% times 60 over 360 days plus the principal of 2 million. So you have value at maturity of 2,040,000. So discount fee is 2,040,000 times the discount rate of 15% times 45 over 360 days. So 38,250 pesos of the discount fee. So you have net proceeds of 2,001,750. Now what if it's a secured borrowing? So let's do another problem, problem 9-5. So stable company discounted with recourse a customer's note at the bank at a discount rate of 15%. The note was received from the customer on August 1, 2020, term 90 days, had a face amount of 5 million and carried an interest rate of 12%. So they discounted it 30 days from the issue date. So the remaining term is 60 days out of the 90 days. The customer paid the note to the bank on October 30, 2020, the date of maturity. So let's calculate the discount fee. So principal of 5 million, first we calculate value at maturity. So 5 million principal, you add on the 90 day of interest. So 5 million times 12% times 90 over 360 of, so that gives us 150,000. So total value at maturity of 5,150,000. So the discount fee is 5,150,000 times 15% discount rate times the remaining term of 60 days. 60 over 360, so that's 128,750, giving us a net cash proceed of 5,021,250. We recognize a liability of 5 million. We also recognize interest income of 50,000, so that's 30 days of interest, August 1 to August 31. We also recognize interest expense of 28,750. It's perfectly fine if you want to offset interest expense from interest income. At maturity, you they recognize liability and also their notes. So that's it, and hope you learned something.